Welcome to this price ladder video. We're going to look at the flipper again. So we did go through what the flipper was in the last video. We're going to now look at a flipper example in the Bund futures. And specifically, we're going to look, this is on, if you want to take a look back on the day to see the structure, how the market was trading. I'm not going to go through this specifically now, but it was the 23rd of September 2015, and it's around 10:35 to 10:40 a.m. If you wanted to look back on your charts to see what the context of the market was and how we were trading back then, maybe it'll give you a little bit of an indication of what he might have been doing there. But I'm just purely going to look at the order book. This is the most important thing for me right now. So let's take a quick look over this. It's going to be fairly quick. Just try and stay tuned to what I'm talking about here. So we're currently trading 55.80s. We've got the market. We've got an 800 lot that's just appeared there at 55.81s. It's just gone bid. 1,000 lot comes in at 81s. It's gone bid at 82s, and then it immediately pulls at 81s and then goes offered 81s. That, what you just saw right there, I know it's fairly quick. I know it's probably, hard to spot if you don't know what it looks like, but that in itself is a market flip. So let's just go through that again. I'm going to reload that. It'll take a few seconds. But in the meantime, I'm actually going to kind of point out what we saw. So let's just see. So basically what we saw was we had a large offer of about 800 lots, I believe, at 155.80s. I shouldn't be putting that as there. It's just how I communicate. So 155.80. Then that kind of disappeared. So that disappears. The next process is that disappears. And then what we get is the market goes bid. And a 1K lot comes to market, trades 155.81s, then the 1K lot pulls. Basically pulls the rug. And goes offered. So let's take a look at that one more time and see that in a little bit. Try and slow it down a little bit and see if we can ascertain what happens here. Trading 155.81s. It's a little bit slower motion. Let's actually try and trade this. So we see big offer at 81s there. Trades 55 lots into 80s. 1,000 lot comes in 82. Sorry, it was 82s. That's where we start trying to get short. We're looking for quick 2 ticks, and that's basically what you're looking for. The flipper comes in at 81s, goes bid 82s, but reloads. Someone actually comes in on the offer at 82s, and then the market goes immediately. Once he pulls his offer at 81s, so basically, once the offer at 81s gets pulled, he had a 1K lot there, or 1.5 or 1.2 or whatever it was. That gets pulled. Once that gets pulled, the market immediately goes offered. But before that actually goes offered, something gets traded here. So we get 200 to 300 lots trade at 82s. This gets pulled and immediately goes offered one or two prices. So the strategy of the flipper, you don't actually know what he's trying to achieve in this case scenario. It could be an algorithmic trader or a trade execution type trader. But in this specific case, he's taken it bid at 81s, trades through at 82s, and then pulls a rug and it goes offered quickly. So in these case scenarios, if you can identify this price action and trade against, usually the traders on the floor look to trade against him. Sometimes there's scenarios where you can actually trade with him, um, where it'll turn on one side and flip in the direction of the size, down and then up again. That's a completely different one. I don't actually have a recording of that one. I'll hopefully try and get one at some point. But in most cases, you're trying to go um, against the big size that comes into the market. So if we had to just quickly define our strategy. So basically, once the conditions are met, we see that there's a bit of funky price action on the book. There's a bit of, some gaming. You've got some algorithms coming into the marketplace, flashing of bids and offers, larger bids and offers here and there. As soon as the market flashes, so you get a flash, basically, flash, large bid or offer. You flash the large bid or offer. Once that flashes, you're basically, if it's a bid, you offer. If it's an offer, you bid. So you'll basically, in this case, the flip side, offer slash bid above slash below. Your target on that, literally on this kind of trade, the target is between 1 and 2 ticks. Usually it's just 1 tick. You're not looking for anything more than 1 tick. If you're looking for 2 ticks, you're getting a little bit greedy. The 1 tick, if you identify it correctly and you see it come into the marketplace, the 1 tick you can get at a very high probability. I mean, I couldn't possibly tell you the probability of that because I have not done the back testing. I think it's quite difficult to actually back test this order book gaming, but it's a very high probability. Now, your risk on the trade, your risk on the trade should be equivalent, 1 to 2 ticks. Again, in most cases, you want it to be 1 tick. If that doesn't go immediately offered, in most cases, I think, from speaking to some of the guys that are really good at this, they'll actually look for a scratch. When I say a scratch, I mean basically get out at the price that they sold or bought. So if they, in this case, if we had to erase this and actually show, in this case, if let's say someone came in with a large bid and I was selling here 155.86s, a 10 lot, and I'm short. If I don't like the conditions and it's not actually going offward quick enough and it's staying a little bit too long, then I might actually smack 10 at market and get myself out of the trade, basically taking a scratch. So that is effectively the risk reward parameters that you're taking on this trade. It's a very quick trade. It happens very quickly. You have to be in tune with the market. And trust me, if you're trying to take this trade and make it work and make it a feasible trading strategy, you have to be looking at the market at all times. You never know when he comes into the market. Some of the senior guys, some of the more elite traders that trade here that are really good at trading this trading algorithm and some other trading strategies as well. You can see their eyes are bloodshot red because they don't even blink. They just watch the screen all day to understand when he's coming in, how to trade it, and when to actually put the size on. If it's working, and you can see that it's working well once you've seen it once, you've seen it twice, maybe you start scaling your volume up really quickly, aggressively trading it because, when it works, it can work, for a good 5 to 10 minutes. You get a good, I don't know, 10, 20 trades on. You make 10 to 20 ticks. If you lose 2 and make 10 or 12 trades, you made 10 ticks. 10 ticks is a great day if you do it on decent size. So it's a very good strategy, very interesting strategy. Like I said, I'm no specialist at this, but I think I know more or less the market dynamics. Most of the senior traders, I think, a few techs understand how it works. Not everyone's very good at it. But, maybe if we're lucky, we can get one of the more experienced guys to actually do a video on this and take a look at what they look at and how they trade this kind of strategy. But yeah, for me, that's all for now. Thanks for listening.